much for your time. And first up, despite the strong profitability, your revenue has seen over 40% on a YoY basis decline. Can you just walk us through the key factors driving disconnect between the top line and the bottom line?
Yes, it's been a very exciting quarter for us. For the first time, we've touched a figure of close to 600 crores of net profit. I remember just a few years back, this used to be sort of an annual number for us. The Indian accounting is a little real estate is a little different because it comes, it emanates from different levels of income streams, unlike some other industries. For an example, you have a lot of profitability attached to OC recognition, and then you get some fair value gain. So it's more of an accounting nuance than anything else. But yeah, overall, very happy with the quarter.
Right. You've also achieved that 57% of your FY26 business development guidance in the first quarter itself. Can we expect a possible upward revision to your annual guidance then?
I mean, very candid. I think this is something I've said even in previous interviews. We really don't necessarily, while guidance, of course, is there from business development perspective, but this is not really a hard target for us. I mean, we look from an opportunistic perspective that if the valuations look great, we continue to acquire more. If the valuations don't look great, we don't really, we take a sort of pause, That being said, I can say with some degree of confidence that yes, you're right. With the fantastic Q1 on the business development side, having logged in 11,400 crores of booking value out of a guidance of about 20,000 crores, I think, yeah, with a degree of certainty, I can say, reasonable certainty that we will definitely cross this guidance. But again, like I mentioned, we're not really driven as a targeted number. This is more opportunity specific that we get to see. But yeah, seems very bright ahead.
Right. So while that metric has done well, if you take a look at deliveries, they've just made up 8% of your FY26 target so far. How confident are you of a catch up in the second half of the year, and what's the plan for timely execution there?
I think we have a very strong pipeline, and we're looking at a 10 million square feet sort of a delivery, and most of it's back-ended, which is typically H2. In fact, if you see many of our years of performance, deliveries are linked to certain activities that takes time during the year to complete. And 1 or 2 quarters tends to be a bit more skewed when many OCs come. We would see deliveries even in Q2, but I think H2 you would see a lot of spike. And yes, there's a great execution focus. To give you some numbers, Q1, COC spend that we've done is an all-time record, in excess of 50% growth over the previous Q1 of the previous financial year. So yeah, I mean, with the degree of confidence, I can say yes, we seem to be on the right track and meet our guidance.
Along with that, you have entered several tier 2 and 3 cities, including Raipur, Panipat and Vadodara. What's driving this geographic diversification, and how do you see these cities fit into your long-term growth strategy? Can we expect more announcements soon?
Thanks. Yeah, this has been a very exciting growth strategy, but maybe let me try and explain how do we go about around your question. I think there are 2 buckets of opportunities. One is more on the group housing side, which is the high-rise developments that you get to see, the tall buildings. This is largely focused on a very specific list of cities, which is like Bombay, Pune, Bangalore, Hyderabad, and NCR. We have some presence also in Ahmedabad and Calcutta, but that aside, we are not really looking too much into any new city from a group housing perspective. But from a plotted development opportunity, because these are projects which you do minimal construction, which is basically create infrastructure at the site, you build a good club, you build some amenities, you ensure the infrastructure is of a quality that people would love to stay and enjoy. And it's a very quick capital churn game. You enter and exit between 1 to 2 years, typically in a project life cycle. This becomes an extremely good opportunity from a capital churn and profitability point of view. And for this, we are exploring a series of tier 2 cities, because India of tomorrow is becoming faster than we can imagine today. And which is why we've identified a group of cities. And as you rightly mentioned, if I go a little bit back as well, we acquired first series of projects in cities like Faridabad, Kurukshetra, Sonipat. Back on the success of that, we got into a whole lot of cities. We've got something in Panipat now, Indore, Raipur, and I think probably just last night we did another announcement on Vadodara. So we're now going to be in Vadodara as well. So yes, and Raipur also we are present. And again, there's a group of cities we're evaluating more. But these are only and only for plotted developments with very strong strategy of capital deployment and quick capital churn, great profitability ratios, and creating great experience for our customers.
Interesting. But Gaurav, given your expansion spree and the land buys, how is it that you're managing capital allocation? Is it from the recent fundraising, or is there any further capital raise as well, which is planned?
I think you're right. I mean, we did quite a massive fundraise. We did almost 6,000 crores QIP last year, which is the highest QIP ever by any real estate developer in India. And that has created a very strong balance sheet for us. And that aside, of course, we are having extremely strong cash flows. Just Q1 alone, we did about 947 crores of operating cash flows. So I think we have enough and more of capital flows coming in each and every quarter, which is more than strong enough to maintain BD aspirations.
Right. So we've spoken about your foray into Tier 2. You already have very strong presence in several Tier 1 cities. Now with this foray into Tier 2, help us understand how you are going to be prioritizing your capital and portfolio strategy.
I think at any stage, while we are growing a lot in Tier 2, they won't really be more than 10 to 20% of our top line. So they will have a very strong presence, but they will still be a very small part of our overall growth.
All right, but now let's talk about your view on the demand in MMR. While we keep hearing the real estate in MMR is saturated, we keep seeing more developments. What kind of demand are you seeing on ground?
I think, I mean, very frankly, what I'm seeing in MMR is the property market acceleration has just moderately started. I think there's a huge headroom for growth. And just to give you some actual numbers to make it more realistic, we used to do about 1,500 odd crores, give or take about 3 odd years back. And last year we did about 8,000 crores worth of sales in Mumbai. And we have a very strong presence in Bombay, from Panvel micro market to South Bombay to Western suburbs and Navi Mumbai. So I can say from live actual data on the kind of demand that we are seeing, I think it's one of the most exciting markets of India. The challenge for Bombay, however, is the quality of land supply is very limited with a quality set of developers. So demand is very strong, but it is for a type of developer. The consumer is extremely aware. They make a very different way of decision-making process. Their families get involved. They're more research-oriented. They know what kind of developer they want to buy. They're extremely picky on product, developer, and market fit. I think those developers that can create that value for customers, I see that demand tends to get aggregated to them, which is why we launched a project about 2 years back by the name called Godrej Reserve in Kandivali as an example, which broke all records of Mumbai ever. It sold about 2,700 odd crores. And since then, it's done 1,500-1,600 crores more of sales after that launch as well. So I think it's a great market, provided you are a very organized developer, you understand consumer psychology, you can create a great product market fit at the right pricing, and then you have it. So I feel it's a extremely exciting market for our portfolio.
Okay, quite interesting. And we'll chat again soon, Gaurav. Good luck with all the expansion that's in the offing for you. Let's just revisit what the market has settled in at. And we were talking about earlier today that given the oversold indicators right now, there could be a pause of at least the selling. But that doesn't seem to be the case. I think that uptake or stability lasted just a very short while. But just, half an hour into